All right. Good morning, everyone. It's been a while. I hope you guys are doing amazing, and I hope you guys have had a beautiful weekend, and the markets have been treating you well as well. On the other hand, I would like to welcome you guys to the market snapshot for today. I hope you guys are enjoying the gold rallies. Although, so we are going to look into today's major news events, of course, as usual. But in the meantime, I want to first give like a minute or two for those that haven't yet joined us to be able to join in as well. Then we can get underway and look at what the market has to offer. First and foremost, I'd like to remind you that this is not financial advice, and please do due diligence before you actually take up any trade decisions at the same time. And if you haven't yet taken advantage of the Caribou bonus in FXPesa, make sure you open your account today with the link in the description as well. So you may want to look at that as well. So you can share the link to your peers as well so that they can be able to join us in today's session. Then you go ahead and look at some of the major key news events. Of course, by now, as you might have seen, we are seeing a gold rally breaking our record highs, broke above way beyond 3,000 yesterday, broke above 3,900 yesterday, and yeah, it pushed almost 4,000, but we haven't yet made that cap. So let's go and look at some of the major events that are in the markets. So I'm going to share my screen in a bit. Oh, sorry about that. So today is, of course, October 7th, and one forex calendar we have, and tend to go this to high news event filters and have this off, and keep the two and see if there's any market volatility expected. So we don't really have any major news movers today, but we do have the IVPMI and the ECB. President Lagarde speaking for the poor will be trading the euro, but this will be later on at 7:10 p.m. This is a low impact news, so you don't want to be really majorly uh, worried about that. So, one thing you may want to focus on, though, is going to be the geopolitical tension or the geopolitics that are moving the markets, especially for that trade the dollar index in particular. So we're going to read like an article too about that. So for guys trading the dollar, so here we have a small article that says the dollar index rose around 98.2 on Tuesday, extending gains from the previous session as the government shutdown entered its seventh day after competing Democrat and Republican funding proposals failed in the Senate. So Democratic leader Chuck Schumer also dismissed President Donald Trump's claim that talks with Democrats were ongoing. On the policy front, recent data bolstered expectations for Federal Reserve cuts, with markets nearly fully pricing in a quarter point reduction this month and another reduction in December. Traders now await fresh cues from the central bank officials this week, including remarks from Fed Governor Stephen Miran on Wednesday. For those of you that may not be aware, Stephen Miran is a newly elected Fed member of recent. That was, I think, mid last year, just before the Fed rate decision on 17th of September. So Stephen Miran was He actually even voted for a 50 basis point rate cut in the previous Fed meeting on the 17th. So Jerome Powell will speak on Thursday. The dollar also drew support from the euro yen weaknesses after France's new government resigned and Japan's ruling party elected a dovish leader. Of course, when you say dovish leader, means a leader who is talking towards cutting more rates. And we also see Japan have their first female prime minister in that same regard. And also France's new government did resign. So on top of Japanese weakness and that's why you're seeing that dollar did gain. And of course, on pairs like the Euro USD, you're able to see that effect on the dollar gain. Yesterday, it was very, very strong. We just saw them go all out bearish throughout that day yesterday. So that's what we are looking at in terms of why the dollar did give us some recovery. They have mentioned, of course, France's new government and Japan having a dovish leader who as well is their first female prime minister. So on this other side, of course, gold prices slipped around 3940, that's today morning, but remain close to a record peak supported by economic uncertainty and expectations of further US rate cuts. The US government shutdown continues with no clear resolution in sight after the Senate on Monday failed to pass funding bills for the fifth time. This has deprived investors of key data needed to gauge to gauge this has deprived investors of key data needed to gauge the health of the US economy, while the Fed also struggles to assess the changing conditions. So traders are pricing a 25 basis point cut, just like we had in September, in October and December, with probabilities over 93% and 82% respectively. At the same time, political shakeups in France and Japan are adding some fiscal concerns elsewhere. China central bank increased its gold holdings for the 11th straight month in September. Gold has climbed 51% so far this year, underpinned by resilient safe haven demand. So, of course, coming into the second weeks of September, we were about 46% year to date on a gold rise. But as we speak right now, in less than 3 weeks, we're at 51%, showing you that gold is really, really strong on that bull move. And these are some of the factors pushing it. As for this week, of course, the French government dissolution, the Japanese prime minister, the dovish prime minister, and as well China buying a lot of gold reserves. So for the 11th straight time this year, we saw them do that in September, also leading to that big pump on gold. So of course, one of the things we want to do is to fight the market direction, fight the volatility. That will rarely works in your favor as well. So you want to remain bullish. So I just want to see if we have some major updates on the FXPesa Market News Center or the Equity Market News Center, same as FXPesa. Then we can be able to go into the technicals and see what major market movers we are experiencing as well. So coming on to this, let's look. Do you have top news that may be showing some kind of volatility? So let's just look at some interesting articles we may see this side. So Jones Energy and Utilities Roundup. This is just an update. So market mix up AI deals. So one thing you need to know that there is an AMD deal on table. So that means that AI is driving the markets. If all of you remember yesterday, we did see S&P 500 and Nasdaq was strongly bullish, basically because the AMD deal, and of course AI that's in focus are driving the markets in terms of guys who are into indices. You're able to see that as well. So then we had an OPEC shock. So OPEC plus supply and geopolitical risks in focus. So oil prices ticked lower in early trading after selling more than 1% after settling more than 1% higher in the previous session, as OPEC plus supply increase for November turned out to be more modest than expected. Brent and WTI are both down 0.2% at 61.24 and 65.34 a barrel, respectively. The US dollar index, of course, traded 0.3% higher. That's even as of the morning as well, it's still pushing higher. So we did see OPEC do a moderate increase in supply, and we all know that high supply tends to lead to lower prices in oil. But of course, we did see yesterday oil was really up there, basically because this wasn't the expected figure. People expected them to increase by way more higher, but then they increased to about 137,000 barrels a day, and which starts of fears of even bigger surplus than the one the market is anticipating in coming months. So I'd expected a bigger supply coming in from OPEC, but then we saw them do it at 137,000 as well. So this is of course still gold near as record record as US shutdown drag zone. So just for context, last time we did see a shutdown in the US government was 2018, and that shutdown happened to last for 33 days. So as far as this the one we are currently in, we're yet to see how long it's going to take. From the article we saw earlier, we're able to establish that now we are at 9 days, which is also not pretty impressive at the time being. So we want to see how long that's going to happen. So as we all know that, of course, the government shutdown means the government has no federal funding. A lot of people are going to be laid off or put off on forced leave. Some will work without pay, which then look good for the American economy. That means major sectors may not also receive funding to run some of the daily economic activities that actually tend to move the market. So another thing is that, of course, on the FXPesa, on your dashboard or your platform, you're able to actually access a lot of those news events because you have a market analysis section where you're able to see all of this. So having seen those articles, we can now dive into our technicals and see what the market does have in store for us in terms of market opportunities. We can look at some major key factors. Let me just share my MT5 in a bit. So in the meantime, don't forget to sign up for the free classes we do have at the different FXPesa academies in Tanzania and Uganda, and of course the online webinars. If you know a person or two that definitely needs them, or even yourself do need them, you can be able to refer them to those classes. All the links for registrations are in the description, and feel free to take up those particular sessions. So starting with the DXY, as you can see over here, we did have a breakout that I've been speaking about for quite some time because of course it's a daily time frame. Price is able to break down into it, pick up some areas of interest, and now push into the upside. And definitely right now the target of this would be taking out this high that happens to be what we call our most closest area in liquidity. So price can go above and close, it can just close and wick up through it and then close slightly below that. So having that in mind, we can now drop time frames and see what other areas we have over there. So price did give us this push up over here. We saw this push to the upside, then a push to the downside, and then price came and gave us another breakout. That, of course, after retracement into this particular low time frame at demand levels, price was able to pick up more bullishness within this area. So it's a 30-minute zone that can be able to look at as well. As you can see, 30-minute zone that price is able to come into and then give us that push to the upside. So in the meantime, what are we looking at? We're looking at probably price taking out these highs, then targeting eventually the daily time frame highs, or those previous daily highs. And coming in from this time frame as well, you can see bullish momentum is so much. So you expect a very bullish dollar probably till the end of the till the New York session, of course. Probably going to take out these highs. And you can expect some retracements within this to a demand level, desired demand level, or into a long week rejection level as we are seeing here. Then probably push to the upside, or price could as well just push all the way and take out these highs right above this. So you can probably use a low time frames, the 15, the 5, to get up some key areas of interest that price can offer you to go in between, to go through, right? So when I look at this, the 5-minute time frame usually has a lot of noise. But one of the things you can focus on is seeing that right now price is pushing from this. So you want a breakout above this high, then that will give you intentions of this time frame going higher. So you will see then a retracement to a demand level that you may want to look for entry confirmations to continue pushing to the upside. So it's the high one price take out intraday. We're in the London session. Can expect that breakout or close at a slight retracement and push to the upside. You'll notice that a lot of times after these retracements, when price is trending, it will give you that small pullback before it continues the move to the upside. So you can see this here breakout, retracement, and price is pushing up again. Same thing up in here, breakout, small light retracement, push to the upside. So price basically forming a sequence of higher highs and higher lows, and these are daily time frame highs. Over here are overall targets, but based on the low time frame structures in here, you can expect some slight retracement or some kind of resistance within those areas, because they do offer us some kind of our resistance zones or supply levels. But just in case price could as well just break out, then give you that retracement and then continue the push to the upside. That's an alternative you can always be able to see in terms of that particular market over there. So it's a dollar index, and of course, when you look at the dollar index, you want to then now go and look at dollar related pairs to see if they can give you what they call a supportive, or the dollar itself can work as a supporting pair when you move on to dollar related pairs as well. So now moving on to let's start with Euro USD, I believe. Let's start with the euro, then we go to GPUSD and try to see if we can build up a biases on the two. So now, as I had mentioned earlier, we did see that dollar strength coming yesterday. Of course, it was not, I would say it was unexpected based on the price action we had seen coming in from the previous week. You could say the price had a very long week rejection showing you some bullishness coming in. But just like we saw in the articles, the French geopolitical events that took place yesterday, the government dissolution, then of course a dovish prime minister being elected in Japan, meant that the euro itself became weak a bit because of that. Of course, when the government gets dissolved, that means business won't move as usual. So that the currency that is affected by the French economy is definitely the euro. And then, of course, Japan, the Japanese yen, we saw them weakening, giving the dollar some kind of strength. So here we could see that price just came in all the way to pushed this long down and gave us kind of like a long week rejection. But just shows you a sign that, of course, as much as it was just a news event that tried to push us lower, then price had to give us a retracement to pick up some more liquidity and say either if it's going to continue the push to the downside, or bullish momentum can pick up from there, because generally when the US government is in shutdown, the dollar tends to weaken. It's just the other political factors from our foreign economies that are basically just supporting the dollar strength, as was highlighted in the articles we saw. So coming into this, based on structure, you may want to have a bit of what they call a more neutral bias, of course, because so that price came to these lows and still failed to take them out, failed to take out these lows. So of course, to predominantly remain bearish long term in the long term, would expect a push and a closure below this level here for price to continue down. That's on the euro itself, right? That's on the euro itself. But then I can start the push to the downside is being supported by this breakout here that gave us an internal structure or internal supply level here that definitely are supporting that retracement. We saw that long week rejections because basically price was repricing to this supply level here to then continue that push to the downside as we saw. For the guys from the mentorship classes, you do know that this is a type of supply level we look at, or an order block type that tend to pay attention to, and this is a type 2. So price was able to hold up with it nicely, and we're seeing that bearish momentum picking out. So you don't want to fight that momentum there. We have these two lows here. Some people would love to call them relatively equal lows, and they'll call this sell side liquidity. It's also quite okay, makes perfect sense. So you can expect this to be your draw, or this area below here to be your drawn liquidity. So that means we're basically looking to that price comes to take out these lows. So going on to lower time frames to see if we can be able to jump onto the continuation of this. We can say there is this supply demand level, sorry, that at the bottom here that can act like a support zone. We have this demand over here that can act like a support zone. It's just okay, have this. So as much as the target is for price to come and take this out, you don't want to sell within where price currently is to this area here, basically because the range that price is giving you is not really a sensible range. It's about 8 pips and altogether 20 pips. So if 20 pips you are factor in confirmation, some bit of volatility, then spread, you find yourself with like a 6 pip or 8 pip or even lower, or a lower pip trade, which is not something viable you want to look into. You won't be able to maximize on your ROI. The alternatives you would look at are for a bearish market to continue would be the supply levels to the top. If price tends to retrace to them, we do have this supply level here. Price tried to retest it but didn't quite get into it. Then right above that we have an extreme supply zone that's all the way up here. So that our preference would be for price to give us a nice retracement. Now the retracement can either come from where price currently is, because we saw a rejection here. It can be from either where price is, or it can be from this demand zone to one of these two zones. Then from those zones you can look for bearish confirmations. That's if they come in, probably usually during the New York session. If they come in, then you're able to look for those sell opportunities and target these relatively equal lows that we saw, or what you would love to call the sell side liquidity. That's something you'd want to watch out for as far as Euro USD. And that, of course, would support the dollar strength, just like we have seen with the USD index pair, showing you some bit of bullishness, being, of course, sponsored by the events yesterday that happened yesterday in the French and Japanese economies. So this is at the Euro USD, as you can see. So of course, a break below this would mean you're still going to wait for a similar thing. A break and closure below these lows, when price sweeps out that sell side liquidity, would now be expecting a retracement into a key area that price would have formed, definitely a supply level. And then you can look for that push to the downside, or that bearishness on the Euro USD itself. So this is basically the outlooks we would have on Euro USD moving into today's market, uh, today's price action as well. And of course, you are factoring in the factor. So of course, a break above this would mean the euro would continue its rally that began, of course, from February, if I'm not mistaken, about February 6th, where the origin of this rally was, or the bullish move. If you don't want to call it a rally, it's a bullish move from about February 6th. We saw that push and coming all the way to these highs where we currently are. So that's Euro USD. So we can dive a bit into GBP/USD as well. Why I like GBP/USD and Euro USD and why I tend to analyze both of them with the dollar index is because you can actually correlate just the euro and the dollar and then still get a definitive direction. But I like correlating both of them with the dollar index. And sometimes there's something called a divergence where I'm able to use it to look for each of the two to best take that decisions as well. So when you look at now this on a lower time frame, since we have a bias basically from the euro and the DXY, I'm going to just go into lower time frames. We had this supply zone here, that beautifully respected price. So we said the first attempt here after price respects supply level, price actually fails to close below any of these lows. You can see this just weeks above them. Even with this, as this also price fails to come back and work below it. So we're going to have this as our overall target for this push to the downside. We have no clear demand level or lower than this. Of course, on lower time frames, we shall find them. We're going to refine that. But in the meantime, we are seeing this momentum is to the downside. So by default, you don't want it to have this as a demand level. But because of the momentum, I wouldn't advise paying much attention to it unless it gives you proper bullish confirmations on lower time frames. So what I'm going to do is to move down the 30-minute time frame and see if I have any major key levels better within that or embedded within that. So looking at these lows here, I can see there is this R zone here that price formed and tells this refined at demand level as well. That price tried to tap on barely, and then it's trying to give us some kind of loss of momentum. So usually when this kind of loss of momentum is there, either price accumulating to now give you that retracement into our supply level, or price just collecting momentum to go and break below these zones. So it's always one of the two things. Either price consolidates to give you like a fake out, then move to a particular direction, or it's going to do that to manipulate people. You can see in this area over here, price is exactly the same. It came and consolidated for quite some time, had a push to the upside, and then later it came to the downside, liquidating all the people who were selling within these zones here, hoping it's a continuation to the upside. But you see this break above came to a supply level here, a type 2 supply level, before it moved all the way to the downside. So looking at this price action, similarly to Euro USD, we have a supply level right below. Either price comes into it, uses it to buy up into other supply levels. So here I'm going to mark two supply levels that I'm seeing above that are the best possible supply levels. We have, of course, the extreme supply level, and then we have the most recent supply level as well. So alternatively, once I pull back to one of those two areas, then will give us probably a 5 or 3 minute confirmation to push to the downside. Now, on the other hand, the other alternative would be price coming all the way lower to take out these lows and then giving us a retracement to a key level or a supply level to continue that push to the downside. Now, that's something else you'd want to watch out for as far as GPUSD is concerned. And you can see there's some kind of like direct correlation between GPUSD and Euro USD as well. Yes, so once again, these zones here are just areas of interest and it's not financial advice. It's just market insight. So you can mark out the areas. When price gets to them, feel free to take up your desired confirmation pattern or confirmation criteria to take trades. Make sure you do your due diligence every single time. So that's it as far as the dollar related pairs. So we can dive a bit onto, let's look at a yen pair. Right, so you can see the gap up that came in. Or now, of course, to the morning market open. As you all know, the Asian session in East African time starts at about 2 a.m. So you had this gap up coming after the election, of course, of their new prime minister, the female one. And that could say that, of course, the first dovish prime minister, which means she's going to aim to cut rates. Now, remember, when you cut rates, by default, the currency index is going to lose value, or it's going to be bearish, right? By default, it's going to be like that every time you look at cutting rates. But as you all know, that GPJPY has been bullish for quite some time. You see this has been quite an interesting rally, and of course are filled with these consolidation phases that we have seen at multiple occasions. But looking at the most recent price action, price did give us a nice breakout right above this, and just before it took out some kind of lows on the left hand side, working as our sell side liquidity, which means price took out all sellers within these zones, and now buyers are in control of the market direction. So in this case, it's a daily time frame. We're going to just zero down to an hour time frame and look for some key levels. You can expect the retracement to come to, and then you can be able to probably wait and get some confirmation patterns within the respective supply levels. So now looking at the current price action, as you can see here, price did give us a 1 hour time frame breakout. Then it gave us this zone here that acted as could have acted as our area of interest. But as you can see, price missed it by a pip, meaning this level or this zone is still fresh, right? So that means price can get into this. Let me just reference this to a 4 hour time frame. We have this major zone. So price can either come into this area here and give us that push to the upside, or going back to the 1 hour time frame, price can come a bit lower. So looking at these areas, there is a nice kind of like QM pattern here, but you know that this risk will relatively be low. So we want to play around with our risk to reward ratios. So these are 45 pips, not something viable for a retail trader to want to look into. Remember, GPJPY is a kind of heavy as well. It's kind of heavy, so don't expect trading the same way you're trading pairs like Euro USD, odd USD, and ZD card. Those are low pip value pairs. JPY, sorry, is a high pip value, a currency pair. So when you refine this demand level, we're able to see that price is forming some kind of like inducement. So price can easily use these levels above here. We have these zones in the supply, these areas in the supply zone that price could still use to see if it can give us some bearish confirmations, and then push either into this buy area or come to the extreme levels below, to try and give us some opportunities. So these are areas you want to watch out for in GPJPY. So alternatively, you can still see a breakout. Since we are generally bullish, we could still see a breakout of the supply level, a nice retest, and then continue, of course, a push to the upside to definitely continue with that trend, as we can see. So it's the area where, of course, you get bearish confirmations. Since we have an area right below here that price could easily target, or price could look to come to, then you can feel free to outsource some kind of 3-minute, 1-minute confirmations within the supply zone here. So you can just refine this to around this. You can refine it to that last bullish candle before that push to the downside, because it's also a type of type theory of our demand of our supply levels here. So that's our GPJPY. So let's move in a bit to Bitcoin or BTC USD. So I've been seeing a nice recovery move on this particular pair here on BTC USD for quite some time. And you can see we have had very many bullish days from about 24th September. We have been seeing it push to the upside with almost no retracement as far as the daily time frame is concerned. So having seen this, that we are permanently bullish, but I want to draw your attention to this area that we have definitely marked out here. So you can draw attention to that particular zone there, and then we start refining. From there, that would be an area where you can want to look for some bullish continuation moves as well. So coming into the 4 hour time frame, the significant areas I have as demand levels, I just want to mark about 3 zones where price could easily come back to, and then give us that push back up to the upside. So we have this area, you have this second area here as well. So those are two zones or two demand levels where we can expect price to come into and definitely give us some kind of buying opportunity. So just upon refinement, you can want to see what other areas we can actually be able to implement. So we thought this first demand level price did come and try to mitigate it the first time, going all the way to this flip, and then what leaves us with the second zone here and definitely the zone below here. So it's the whole same zone. We have this area, then this area here. So the areas where you want price to come and then give you some kind of bullish confirmation in order for it to continue with that push on Bitcoin to the upside. So alternatively, in case the market is to continue to the upside, what would be the conditions you want to see? So going to 30 minutes, you want to see a shift pattern in the 30-minute time frame. That means we're waiting for a shift to the upside. A shift to the upside. So that means if this is the low we have, if this is the low we have on that move, we are going to look for a high or the high point responsible for that low, and of course a break above this area and closure, candlestick closure, very important, means you'd anticipate a retracement back into the zone, probably a demand level, look for confirmation of your choice, and then continue with that push to the upside. Don't forget to manage your risks well. Risk management is key. Another day, another dollar, so you don't want to leave that out or behind. So this is a BTC USD. So then you can move in a bit onto ZAO or gold. Okay, let me have a new gold chart. So now coming to one of the most loved pairs, and this is gold or ZAO USD. So gold, of course, as we all know, has been very, very bullish. One thing you don't want to do is to try to anticipate or think gold is overbought. It cannot be overbought. Just keeps appreciating over the period, over years. I mean, it's up 50% until this time this year, 51% to be precise, which is quite a major gainer for gold this year. So looking at the most recent structure, get this 4-hour buy area, the price already tapped into, and I believe it's trying to come up with some kind of confirmation pattern or looking for a major key area of interest. So looking at the buys here, you're going to realize that there is this all area here, and that is called hidden formation or hidden at demand levels. So looking into this area here, we can refine it a little bit and see if we have any entry pattern. Remember the two entry patterns we use. One is a QM level and the other one is our confirmation or a shift pattern. So looking into this, what do we see? Do we have anything significant? We can just refine this all the way to this, and then look and see if we have anything on the 1 minute time frame. So price has apparently, okay, let's have this. So coming into this, you can see we have a QM level right around that. Some people would want to refine them on the left like that. So you still get a nice setup. You still get a pretty nice setup in this scenario here within that QM level as we are speaking about. So right now, once you see how price is pushing to the upside, what would you want to? So we have this intermediate highs, then this low price has formed. So seeing a nice break above this would mean you can now look for buying opportunities after a candlestick closure above that high, and then upon retracement. So where now you can go on lower time frames and look for your entry area. So it's a break above this area, slight retracement. Of course, get a low time frame confirmation. Since you're in a 15-minute, probably a 1 minute confirmation help you do would help you get up with the best confirmation patterns in regards to this, because this is intraday. 1 to 3, 1 to 4 is something that I think gullible. You can be able to fairly take something like that, try and continue with this push to the upside. As we all know that as much as the gold will give you these retracements or these sell-offs, as long as the trend is generally still bullish, then it's always safer to look for those bullish opportunities and look at the conditions that can lead to them, as long as you're of course in the markets as well. So this is something we want to see on gold. So of course your target would be the supply zone. Now remember, these targets still act as areas of interest. If you have a supply zone like this, price can still get into this and probably pick up enough liquidity and now give you a bearish confirmation. But for now, there will be targets since we are bullish. So we have this and this as our major targets. But of course, the overall idea is to ride the wave of gold all the way to the sky or to the moon, as people tend to say. So that's something you want to watch out for as far as gold is concerned. So of course, a break below this doesn't mean you give up on that. We still have a demand level still within the same breakout, right? We have this type 2 demand level as well. So we still have this demand level in case the one that's currently holding price fails to give us an entry to continue the buys from up there. We can just be able to use this to continue that push to the upside. So until price closes below that, you remain bullish particularly. Till price closes below this, remain bullish, because then the structure wouldn't have fully shifted or given you a change of character or a confirmed change of character per se in that particular scenarios. So that's as far as gold is concerned. Then let's look at from the headline. Of course, we did speak about oil. A few minutes ago, I did give some insights on oil as well. Oh, it's already here. So now this is our US 100 chart, or US tech as well. So we did see, as I mentioned earlier on, we did see new highs that Nasdaq created around there, about 25. It finally broke to 25,000. So now you can see these are the highs we have, and of course within that structure there, these highs they didn't close above here. So I'm not going to consider these lows that much. I'm going to just focus more on what are the most recent moves that price offered me that could basically support this continuation to the upside on NAS 100. Of course, on top of the AMD deal and the AI waves making news, we can now look at the technicals and see what they tend to offer. So on the technicals, going to our 30-minute time frame, of course here you'd have seen a breakout in that area. Then we saw that retracement into these demand levels here, where price has been able to give us a shift pattern and currently is giving us some kind of confirmation pattern to start pushing our all the way to the upside. So we have this other demand level here. So what we'd want to watch with this is for price to comfortably come and close above this high, come and close above that high, then offer you some kind of retracement, and then consequently push to the upside to target new highs on NAS 100 or Nasdaq as well. So that's what we are looking at on NAS 100 or the index as well. So don't fight that trend, don't fight that trend. Wait for price to get to areas of interest, then you're able to take up some confirmation trades. Always highly advisable. The beauty with confirmation is that you not only get more confidence in the trade, but you also tend to get some kind of a lower risk in most cases, especially if you're aligning the confirmation entry pattern or the entry or your entry criteria on a lower time frame. It's why I tend to come from up all the way down to where I'll look for my entry confirmation. So I see the bullishness coming in on US 100. You don't want to fight it. You don't want to fight. You want to just wait for it to give you conditions from which you can take advantage of. And then finally, coming from our headline or our title today, we do want to look at US oil. US oil. So we did see yesterday close bullish, of course, from the OPEC Plus shockwaves, 163,000 uh, barrels of oil per day added to the surplus. So I want to see where this breakout here to the downside and also a breakout to the upside over here. So the idea here would be to see price retrace back into these zones and probably get a high time frame area where it can be able to uh, push lower into the downside as well. So remember, the whole goal is to have lower prices on US oil. Overall goal, especially for the US, particularly for Trump, we should say for Trump, right? is a drill baby drill only becomes effective when, of course, oil is affordable for his people or for the American people. That affects very many other parts of the market, of course. So looking at the supply level responsible for the breakout, or within the breakout area, we had this type 2, and you can see price came and tapped it the first time, pushed lower into the demand, came back the second time, and you can see it pushing lower. So I'll still expect some kind of bearishness to come in to that side. Since I think by now the market has now priced in the 137,000 barrels of oil per day. They expected it to be bigger than that, but it didn't happen to be as big as that as they anticipated, which meant that, of course, the US oil did give us some bit of rally yesterday based off that news. And then today it's now starting to stabilize back onto its downward trajectory, as we have been seeing other f- for most of the few weeks, I think. Yeah, for most of the few weeks, we have been seeing it give us this push to the downside practically from the most of the year. Yes, practically from the most of the year. So that's what you look at when it comes to US oil. So looking at some key levels, we have mentioned, let me see here. Looking at the key levels, so the supply level initiating the move, then we are seeing the current price action giving us this kind of consolidation, a push back into these areas here, then now a push all the way to the downside. So it targets here, and I think they're going to be the lows that you have this side, the left hand side. It's going to be those lows, and then looking at lower time frames, don't really have any direct demand level in between here, so it would be nice to look for that slight pullback and then get those bearish opportunities as well to push the downside. So that's something we really want to watch out for when it comes to this pair, because our overall target is down here and price not really leaving us a big footprint in terms of areas of interest on lower time frames. But what it's doing is that we're able to see this from the technical perspective, and of course adding a bit of fundamentals to see what is pushing oil lower. Why did it go up yesterday? Then we can take advantage of it. So I think the OPEC sell-off shock is probably done by now, so you can now start factoring in those bearish moves on US oil and see if you can achieve the desired prices or desired low prices of US oil or West Texas industries as well. So this as far as US oil is concerned. Once again, I'll let you remind you, don't fight the momentum. Trade with a trend, trade with a trend, trade with a trend. So once again, of course, the criteria we tend to use with this is the same criteria we use when you're coming up with a trade plan, concept, where price is going to, how price is getting there, when price is ready to go there. So when you have all the three, you've beautifully aligned three time frames to speak the same language, and you're able to capitalize off your entry confirmation once they're nice ones. So here you can see just at this supply level here was able to be refined all the way to this area here, giving us nice beautiful sales the first time and now the second time, showing that that's a strong resistance zone. Price really has no enough liquidity to go above it. So now let's look at silver. Let's just look at silver and see if it has some opportunities to can offer up for us within today's market session. So looking at silver, silver as well has been on a bullish trajectory. We're currently at new all-time highs as well. That was yesterday, not today. Today price didn't quite get to the new all-time highs, but yesterday price did offer us a new all-time highs on silver. So going to the 1 hour time frame. So let's first do the 4 hour. So coming into the 4 hour, so this deep retracement that came in on NAS 100. Came into this demand level here, and then it's now giving us this kind of rejection. So the bit anticipation would be to say a bearish, the candle closed bearish, particularly. Then you can anticipate some kind of like small push to the downside, then upside, or just a push to the upside to continue creating new highs in that regards as well. So that's on a 4 hour time frame. On a 30-minute time frame, can we be able to refine this level here? We're able to refine it all the way there, and then let's have this over here. We're able to have that, and now seeing that push to the upside. Now because here we have no intermediate lows, We just have this highs over here, and time momentum move to the downside. We can anticipate and wait either for price to come and break above this area. When price gets to this zone, wait for that bearish up shift to the downside, and can be able to opportunities within that particular market and this market conditions. So basically, that's what I'm seeing on silver. So I'm going to take up a few questions and see what you guys think about the markets today, and of course, see what best we can look at. In the meantime, don't forget to create your FXPesa account today. And if you are, of course, in Kenya and you're using FXPesa CMA, then definitely you are eligible for the 100% Karibu deposit bonus from $10 to $5,000. So feel free to navigate that right now. So just as says, good morning, Emma. Kindly do analysis on GPUSD, EURUSD, and ZAO. I think we have looked at all those pairs, and we did see GPUSD and EURUSD giving us the similar analysis. Either we have a push into this area to give us bullish confirmations to come to target either this supply or the supply above, or price could just alternatively, I said from here, just come to any of these two supply levels, give us that shift pattern, the one that gives us the most credibility, and then now give us that sell to the downside. Now, one thing I'll never stop doing is stressing the point that supply levels, demand levels, order blocks, FVJs are just areas of interest. They're just areas of interest. But imagine having that in a 1 hour and getting a 3 minute, a 1 minute confirmation. So, confirmation criteria are very, very important. Very, very important. I can't stress that enough. So that's for just us, Charles. So you can always rewatch the market snapshot during your analysis. But we did look at this on a JPUSD, and we had something similar on Euro USD as well. And then, of course, we have just looked at gold a few minutes back. Would you say oil is in a rally or a retracement? A retracement. It's a retracement basically because coming out of the OPEC meeting, we did see 137,000 barrels of oil added to daily supply, but people had anticipated the supply would be more. When the supply is more, the surplus would be big. That would draw lower oil prices. So the whole goal is to have lower prices on oil. The whole goal would be take lower prices on oil. That would be the whole goal. So that's just a retracement. But if you notice that ever since Trump came into power, with a drill baby drill, we have been looking for those. We have been looking for those what? We have been looking for that low price on oil, but we haven't gotten to where they want it to be, right? So Nasdaq, we did look at Nasdaq a few minutes back. We have looked at Nasdaq a few minutes back, and this was our Nasdaq analysis. So its area is broken above, so can expect a retracement into low time frame demand levels and take up that push to the upside as well. So we have seen that aggressiveness. As I said, don't fight the momentum despite the push down yesterday. And you know that right now the market's now pricing in the whole idea of AI and the AMD deal as well, which is positive for the Nasdaq, right? It's positive for the Nasdaq. The S&P did react as well. So it's just a retracement. Remember, before a daily candle forms, or when a daily candle forms, price is or it's forming, price first goes lower to create the low of the day, then it continues to the upside. So it's the area we're trying to look out for. So even the New York session, you expect some kind of a push retracement as well. So that's our Regan Wings, Nasdaq. So the Nasdaq analysis that we did take up and has formed a very nice beautiful engulfing pattern that shows that price has no intentions of going lower unless otherwise. But this long wick rejection is a very key area, so you can expect a push lower. So of course, the higher the time frame, that's the criteria changes a little bit. So yeah, in this case, we're using the 1 hour. This would be your breakout area, right? This would be your breakout area. Push up lower, then go into that USD JPY. So I think we didn't look at USD JPY. So let's look at USD JPY. Let's look at USD. But remember, from the headline, the yen weakened after their new president or their new prime minister, sorry, who has been said to be a dovish prime minister. And of course, from that call we began with, we did see that the main reason for the dollar strength from yesterday was because the Japan elected one of the reasons. There were two reasons. One of them was because Japan elected a dovish prime minister, right? Of course, a female. Then here, that means the yen becomes weak when they have someone who they expect is going to be pushing for rate cuts on a currency. So the currency index always lowers. So yeah, we expect them to take out this high. Of course, this is a daily time frame. So going down to 4 hour time frames, we can look for some key levels that are being formed. So in the 4 hour, we have a demand level right over here. Price already closed above it, which is okay. We have that demand level, and then let's go a bit lower. Still going to be the same demand level we're going to pay attention to. where we shall look for our confirmation criteria within that. So when you come now to the low time frames before going intraday, you realize that there are now two demand level. We have this first demand level here, which is a type 2. Then we have a second demand level right down over here, which is a type 1. So these are areas of interest where price could retrace to, and then you can look for those bullish confirmations. So USD JPY, that's the outlook we're having. Very similar to GP JPY, because what's driving the US dollar to strength, one of the reasons is the Japan politics, and of course it's also affecting the other side of affecting the side of the GP JPY as well. So EU and G analysis, that's GP USD and Euro USD. We just did that, and I've just reiterated the analysis we did, and we spoke about the same things. So you can feel free to rewatch the market snapshot after it's done and just see how we came up with these ideas. But we have just done this for the second time a few minutes back, and spoke about how we expect the market to move, either break below, go down, or use this area to come into this area to sell, or use the same demand level and push there and then go lower. So I wouldn't advise anyone to trade both G and EU because they're directly correlated. But what you can do, you can analyze them and look for which of the two uh, gives you the best setup. That's what you can do. You can't trade the two together. You usually be wasting time because they're going to be doing the exact same things. So that's ENG analysis as we had seen it earlier on. So this is your USD, then this was JP USD. You can see either push from there into one of the supply levels to push lower, or we can see it going to the demand, but already tapped slightly on this demand level here. If you can see that clearly, it already tapped slightly on that. So you can then see either push to this area, one of these two areas, where we shall look for low time frame selling confirmations. So other than that, don't forget to sign up for other advanced mentorship classes for those of you that need them. For those of you that are okay and just looking for market opportunities, don't forget to tune into the market snapshots Monday to Friday, 11 a.m. So once again, don't forget to sign up also for our free academic classes in Tanzania and Uganda at the physical locations. FNB House for Tanzania, third floor, Rumi Building, Lumumba Avenue, Uganda, and it's a seventh floor as well. And of course, don't forget the Karibu bonus for those of you that are trading with FXPesa on your first deposit. The link is in the description. Don't forget to create that. Other than that, I would like to wish you guys a peaceful day and a blessed week ahead. Cheers in those regards.